in an M3, for example, if I'm going minus 125 delta on an M3 and I back test it, I notice that I always lose to the upside when we have big up. Oh, well, that kind of stinks. So I cut it back. If I go to 0 delta, I might find that I take on too much down risk that I'm comfortable for. Now, the thing with the M3 lately, particularly in the last several years, you're much better off being more positive delta. In other words, if you set a maximum negative delta of 0 on that trade, it performed extremely well over the last couple of years because the market has been just so bullish. But when you start getting in this crazy, fast-moving back and forth market, you're going to start having trouble if you run too positive delta, or if you get in a continuous downtrend, you're going to start having trouble with too positive delta. So what we did with the M3 and with the X4 for that matter is we just average out what works most of the time. And we know that if I trade it by the rules, since I'm using the same rules for every market environment virtually, by the rules all the time, I am going to experience a little bit of trouble in continuous upgoing markets, and I'm going to continue to experience a little bit of trouble in fast crashing down markets, but 99% of the time, other than that, I'm going to be perfectly fine.